What's up, everybody? Nate here. So taxes in the United States has always been a super contentious issue, and over the last 2 years, it's gotten even worse. We are constantly seeing headline after headline of some billionaire or billion-dollar corporation who somehow ends up paying $0 in taxes every single year. And obviously, that is pretty frustrating to the average American who pays taxes on just about everything. Their property, the things they buy, they pay taxes at their job. The federal government and state governments are always trying to get their cut from the average middle-class American, and somehow billionaires avoid this. So is the system actually built for the rich, only to exploit the poor? Well, this whole situation is really complicated, and there have been a lot of proposals over the last few years that have tried to up the amount of taxes that the top 1% pays in the United States every single year. Not only that, but corporate taxes as well. Well, today I want to give my thoughts on all of it, and I want to finally go over if rich people are just that super greedy, and if taxing the rich a lot more is actually going to help out everyone in society like we think it will. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free, and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now let's talk all about taxes in the United States. So the first thing I want to go over is two distinctly different terms: tax evasion and tax avoidance. The first thing you got to know about tax evasion is that it's completely illegal. This is somebody that is not reporting income on their tax returns or is hiding money from the United States government. They could be lying about the amount of gains that they have or about how many jobs that they have. The point here is that they're trying to hide something from the government so that they don't have to pay those particular taxes. And that is completely wrong, and it is completely illegal. But now the other term is tax avoidance. Tax avoidance is very similar, but you are actually not paying taxes in a legal way. You are working within the pre-established tax code to actually lower your yearly income or just the amount you pay in taxes for all of your investments and wealth. This is what the wealthy do with their money. They look at the tax code, they hire lawyers, and they figure out how exactly they can take all of the money that they have and continue to grow it, all without paying taxes. The United States tax code benefits you the more you know about it. There are a lot of things in there that allow businesses to actually continue to grow and individuals to grow themselves and their community without paying a lot of taxes. So with that being said, how exactly do the rich avoid taxes? So the first and number one way that the rich avoid taxes is that they don't have an income. And this is pretty strange because you probably see millionaires and billionaires going out and spending a whole bunch of money every single day. And that's true. Millionaires and billionaires do spend a whole lot of money, but they don't make money like you and I do. The thing that millionaires and billionaires do is they hold assets. These assets have an unrealized amount of value. To make this very simple, think about the stock market. The average price of a stock goes up and down every single day. Let's say you own a share of a company that's worth $5 today. Now, if tomorrow it's worth $500, then how much money do you actually have? Well, the answer is zero. You actually have no money until you actually sell that asset. And this goes for real estate. This goes for commodities. This goes for cryptocurrencies, and of course, the stock market. These are things that the wealthy own. They own a lot of things that they can eventually sell off and get a whole lot of money for. But it's really difficult to tax these things until we know the actual value of that asset. Because all of these assets are basically just imaginary money, well then how exactly do you tax imaginary money? For instance, if you wanted to tax the gains on something, well then you actually have to know what the gains on that asset are. This is something called the capital gains tax, and we'll talk a lot more about that later on in the video. But for right now, you don't actually know what that thing is valued at until you sell. That's really how you know the value of anything. If somebody's willing to buy it at a certain price, then that's the value. Today, the value of that thing could be worth $500, but tomorrow it could go down to $10. But until you actually sell it, that's when the imaginary money becomes actual money in your pocket. So taxing it is impossible because the value changes almost every single day or every single week, month, or year. Now, this differs from what the everyday average American does. The average American gets taxed on their value, the amount of income that they bring in every single year. All of that is an actual value. We can measure that. You work for, say, $15 an hour. That is literally the amount that you work every single hour. That's what you get paid. That's how much value you're bringing in. Or you make an X amount of money every single year, so that amount is going to be taxed. It's very clear how much you actually make. That's why your income is taxed in general. That is a realized gain. You're literally working and making money every single time you work, and you're getting a paycheck almost immediately. So that is the first way that the rich avoid taxes, but there are a lot of other ways. For instance, millionaires and billionaires use something called a backdoor Roth IRA. Now, this differs from a regular Roth IRA because you have certain contribution limits that you can make every single year. The Roth IRA is very similar to something called the 401k plan. It's basically a group of different assets that you can put your money in every single month, and it continues to gain value. The Roth and the IRA in general came out because a lot of people don't have access to a 401k at their job. But just like a 401k, there are contribution limits. Millionaires and billionaires, though, get around this because of a really big tax loophole in our tax code. They essentially contribute to a traditional IRA first, and then once they hit a certain amount, they actually flip it and take all of that money and convert it into a Roth IRA. And when you do that, you no longer have a contribution limit. This is because you already started to contribute to a Roth IRA in general, so now you're going to get no contribution limit because that's what you've already been doing. In addition, investors will sometimes put their money into an institutional IRA. This is the same as a regular Roth or an IRA account in general, but instead of investing in your big public companies, you're actually investing in private companies. This puts a whole lot more risk on the investor. It's really difficult to get into these types of programs because you have to show that you already have a lot of wealth or have a really big income in general. They don't typically give this to the average American because it's a very risky investment. Some of these startups and these private companies are going to fail, which means your entire Roth IRA or institutional IRA is going to go down. They don't want regular Americans to put their money into something that's going to fail like that. So because it's so risky, you have to meet certain parameters in order to invest in it. And then of course, the way that the 1% spends their money is a whole lot different. And I'm not just talking about spending their money on investments. The 1% has a lot of nice things, from big mansions to fancy cars and even private jets. But they don't spend their own money here. The rich actually only spend with debt. You don't pay taxes on a loan, and that's what millionaires end up doing. They will take out loans against all of their assets and then go out and spend that money. So they'll take on $1 million loan and then make small payments to it every single month. That way they're paying the least amount in taxes, because if they go out and buy $1 million house, then that's less money than they have. And the only way they can get their money is by selling their asset and then paying a capital gains tax. That means their taxable income is going up, so now they have a lot more that they have to pay, but without using their own income or their own investments, they essentially pay $0 in taxes. So that is just some of the ways that the rich avoid taxes in the United States. And again, they are avoiding taxes. Many of them are not evading them because that would be illegal. They are working within the pre-established tax code, but the tax code in the United States is always changing. Recently, there have been a lot of bills to change the tax code and make the 1% pay a whole lot more. One of those is to de-incentivize stock buybacks for individuals and companies all throughout the United States. There has been recent bills that would put a 2% tax on any stock buyback that you make. So if a company has any extra money, they can do a variety of things with it. They can reinvest in their business, they can give out dividends to the investor, or they can reinvest in their stock and do a stock buyback. They're actually literally buying their own stock. Now what that does is make the stock price go up, which would be the same exact exact thing if they gave out a dividend. It adds a whole lot of liquidity to the market because now anytime they have extra money, they're growing their company, but they're doing it in a way that protects their shareholders and their stock owners. Adding to that liquidity allows them to do a lot of other things without directly investing in their own business. They're getting investors to invest for them. This proposal would mean that every single time they buy a share, they'd have to pay a 2% tax on it, which would make it a lot harder for businesses to buy back their own stock. In addition, President Joe Biden and his administration have proposed increasing tax brackets for the 1% in the United States, pushing it all the way up to almost 43%. That means for any amount that they actually make, they'll be taxed on that money by 43% at their highest amount. And finally, they want to raise the capital gains tax. So the difference between what you paid for an asset and how much you actually sell it for, well, you can be taxed on any amount that was actually gained. Congress has talked a lot about increasing the capital gains tax almost up to 25% for your long-term investments. Right now, it's a maximum of 20%. All of these proposals would bring in hundreds of billions of dollars in tax revenue every single year. And that begs the question, will taxing the rich actually work? Well, taxing the rich could definitely help, but it's important for you to understand what exactly the 1% means in the United States. According to President Joe Biden and his administration, the 1% is anybody that makes over $400,000 a year plus. Now, I'm sure I don't have to tell you that making $400,000 a year and making $100 million a year is completely different. Both of these individuals would be taxed in the same way. So the person that makes $400,000 is going to lose a whole lot more of their money than the person making $100 million. I mean, technically it's all going to be the same, but the person who's making more gets to keep more. And that's not exactly fair. And at the end of the day, the people who are making $400,000 a year at their job are going to take the brunt of all of these new tax rules. This is because the vast majority of your millionaires and billionaires don't have an income. They have very little that they can actually be taxed on. So realistically, the ones that are going to be most affected are the lower earners of that 1%. Now, that doesn't mean that we shouldn't tax them at all. What I'm saying is it's not going to be an end-all be-all solution to America's problems. You got to think, what exactly are we taxing for? Why exactly do we need to add on to all of these taxes? Well, one reason is because a lot of Americans feel like billionaires and millionaires are not paying their fair share. Sure, taxing them more would help. Restricting the amount they can do would help. But overall, how much do you actually think it's going to help the United States as a whole? Right now, the United States brings in way too much debt, and even though we can get some money in tax revenue, it's still not going to be enough. We have to continue to bring in more, and that's just a problem with our paper money fiat system. We can print as much as we want. We can take on as much debt as we want, so there's always going to be a problem of not having enough because you can always do more. Taxing people more is not going to solve that solution. In fact, it's only going to add to it because now once you hit a certain peak, you're just going to need more money. What I think is going to help a whole lot more is actually taking the amount we get in tax revenue right now and reallocating it towards resources that make a whole lot of sense for our country in 2022. We have to be a whole lot more creative and innovative with our tax system and the way that we use that tax money. The money that the United States federal government uses, well, they have no incentive for it to be used in an efficient way. They could literally hire someone to open and close this laptop every single day. They are creating a job, they are paying someone, and they're using that tax money, but they don't have to use it in an efficient way. This is because they are currency producers. They create money, so they have no incentive to use it in a way that's going to help everyone. Businesses, on the other hand, have to use money in a more efficient way. This is why businesses get in a lot of trouble for a lot of their policies, because they have to use money efficiently or else they're going to fail. They don't have an unlimited amount. Now, I think this is definitely going to change in the future as millennials and Gen Z becomes a lot more wealthy. Then we're going to see a lot bigger changes in our society and a lot of changes to taxes and the way we use taxes. We're going through one of the biggest wealth transfers in history right now, with the baby boomer generation essentially trickling down all of their wealth to millennials and Gen Z and some Gen Xers. As those generations get more money, well, they're going to make a lot of changes in their communities and in the country as a whole that really suit their own beliefs. Not only that, but raising taxes today creates a precedent for the future to just raise them more. And right now we define the 1% and what rich is at $400,000 a year, but that could change in the future. This could mean that the tax bracket gets lowered even more and even further, hurting a lot of Americans indirectly because of the wealth imbalances throughout our country. We might change it to the top 5% or the top 10%. Nobody really knows what's happening or what's going to happen with our tax code. It's all up for interpretation, and what we consider the 1% today and what ultimately becomes the 2 and 3% is all up for debate. And that is becoming more of a reality every single day. Right now in the United States, there is a big chance that we could see a recession in 2022. Recessions are responsible for creating more millionaires than any other time in American history. So what you start to see is the wealthy and the rich get even richer, but the poor and middle class get even poorer. As that gap continues to widen, you're going to see more pushes from the lower and middle class to get the wealthy class to pay more of their fair share. That is just what happens. It's happened with every major economy in every single civilization in human history. So taxing the rich will definitely help in the United States, but we have to do a whole lot more than that. There are systemic issues in our society right now, and in my opinion, can only be solved by financial education. Recessions happen, and the wealth gap is only going to get wider, but that doesn't mean that you have to stay on the lower end of that deal. There are so many different resources out there for you to start building your wealth and for you to start making a whole lot more money. Once you know how the system works, you can start benefiting from it, and you can stop running the rat race your entire life, wondering where all of your money goes, wondering how you're going to pay your next bill, wondering why you never have enough money. I think that is the true fix for our issues in the United States when it comes to financial inequality. But definitely doing both can't hurt either. But now I want to hear from you on this issue. What do you think about taxing the rich in the United States? Do you think this is something that could actually work to benefit everybody all at once? Or do you think taxing the rich is not going to work and it's only going to cause more problems than it's worth? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.